Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Sage5.tv, and in this video, we are going to try and understand what's behind crypto market cycle, especially the 2024-2025 bull run where we are today. So cryptocurrency markets have historically moved in cycles of bull market or sustained price increases, as well as bear markets, which are periods of prolonged decline. In a bull phase, prices rise steadily and amid optimism and strong demand. In a bear market, prices fall amid fear and excess supply. Bitcoin's roughly 4-year halving cycle, when the block mining reward is cut in half, often aligns with these swings, reducing supply and contributing to scarcity-driven uptrend. However, liquidity conditions or the availability of capital in markets are equally crucial. Major crypto rallies have tended to coincide with periods of abundant global liquidity or expansionary monetary policy. So, as you can see, we are going to be looking at a number of factors here. But before I proceed with the video, guys, this is not financial advice. I'm not a financial advisor. Please do your own research. This content is not targeting UK audiences. That said, let's come back to this video then. Let's start with supply and demand dynamics. Fundamentally, crypto bull runs occur when demand outpaces supply, whereas bear markets set in when supply exceeds demand. For example, Bitcoin's programmed supply slowdowns or halvings can create a supply shock. Each halving has historically preceded a bull run as new supply shrinks and demand, if steady or growing, pushes prices higher. Conversely, after euphoric peaks, demand can quickly wane while many investors rush to sell, increasing effective supply, tipping the market into a downturn. In fact, many bear markets follow an explosive rally. Once prices overshoot and buyers are exhausted, even a small increase in selling or drop in buying can trigger a sharp correction. Next, let's look at investor sentiment, or FOMO versus fear. Market psychology plays a key role in crypto cycle. In bull markets, optimism and FOMO, or fear of missing out, lead to greedy behavior. Traders pile in, expecting future gains, and posit news feeds exuberant. This optimism can become self-reinforcing, driving prices to unsustainable highs. In bear markets, fear and pessimism dominate. Negative sentiment leads to panic selling or investors retreating to safer assets. So in essence, greed drives bull runs and fear drives sell-offs. Social media and news can amplify these emotions. For instance, hype around new technologies or hot projects often marks bull phases, whereas scandals or rumors can deepen fears. Next, let's look at regulations and policy. The regulatory environment often influences crypto sentiment and adoption. Positive regulatory developments such as a government legalizing crypto or clarifying rules tend to boost confidence and invite investors. Historical examples include nations like El Salvador adopting Bitcoin as a legal tender, which contributed to bullish sentiment. Conversely, regulatory crackdowns or bans have triggered bearish turns. A notable case was China's ban on Bitcoin mining back in 2021, which coincided with the market pullback. Similarly, high-profile legal actions against crypto companies or negative policy news can erode trust and increase sell pressure. In short, friendly regulations reduce risk aversion, while hostile policies can spark sell-offs. Let's move on to market liquidity and macroeconomic factors. Broader economic conditions strongly affect cryptos. For example, high liquidity and easy monetary policy, low interest rates, or quantitative easing leave investors with more capital and a higher appetite for risk assets like crypto. The massive 2020-2021 crypto bull run was aided by the low interest rates and money printing during the COVID-19 pandemic, which flooded markets with liquidity. In contrast, tight monetary policies can restrict the flow of money into crypto as investors become more risk averse. Next, let's look at innovation and market narrative. Finally, each cycle is influenced by technological innovation and new narrative within the crypto space. In bull markets, exciting new sectors often capture investor imagination. For example, the 2017 boom was driven by ICOs or initial coin offering, which was a frenzy, and back in 2020-2021, we saw DeFi or decentralized finance and NFTs surge in popularity. These innovations create waves of new demand and speculation for certain altcoins. As hype builds, valuations can overshoot reality, sowing seeds for the next correction in bear markets. So, looking at the 2024 to 2025 crypto market rally, key drivers and events include the macroeconomic tailwinds. You got the global economic conditions during that period turning more favorable for crypto. After aggressive interest rate hikes in 2022 and 2023 to fight inflation, central banks shifted their stance by late 2024. Inflation showed signs of cooling and the US Federal Reserve began cutting interest rates. For example, the 25 basis points cut in December 2024, which improved liquidity in financial markets. Lower rates and the prospect of easing monetary policy encouraged investors to move back into risk assets, including cryptocurrency. So in practical terms, as borrowing costs fell and recession fears disappeared, cleared or abated, more capital became available for speculative investment, a classical recipe for a crypto bull run. Additionally, concerns about persistent inflation and currency debasement have strengthened Bitcoin's appeal as digital gold. Investors eyeing Bitcoin as an inflation hedge or an uncorrelated asset increased their allocations, especially as real interest fell. Another macro factor has been the expansion of global monetary supply in certain regions. Some analysts noted that Bitcoin price is historically correlated with M2 money supply. Where money supply expands, Bitcoin has often been in a bull phase. Next, let's look at spot ETF approvals and institutional inflow. This was a watershed moment in 2024 where we saw the likes of BlackRock, Fidelity, and many others launch their spot ETFs, and they are the best performing ETFs in history from what I can gather. The inflows via ETFs continued into 2025, providing consistent support to the market. Analysts noted that ETF demand was unprecedented, with nearly 37 billion of net inflows in just the first year of this product, which is also historical. Rising institutional and corporate adoption has also been a factor during the current bull cycle. Hand in hand with ETFs, broader institutional adoption of cryptocurrencies reached new highs by 2025. Large financial players and corporations increased their investment, lending credibility and deep pockets to the market. For instance, MicroStrategy, now known as Strategy, and other public companies aggressively accumulated Bitcoin as a treasury asset, and by the beginning of this year, 2025, over 70 public companies hold Bitcoin on their balance sheet. Strategy alone is approaching 600,000 Bitcoin, which at current prices of 118,000, you're talking of over $70 billion that Michael Saylor and Strategy hold. Traditional financial institutions also entered the fray in 2025, including several US banks, and some notable events as well in 2025. You had the Bitcoin halving in 2024, where the block rewards have dropped from 6.25 Bitcoin to 3.125. So that is a massive cut to supply. US election and policy outlook, with Trump pushing for Bitcoin and the crypto markets also being a player within the markets, that is played a part as well. The global regulatory landscape is also shifting, bringing in more clarity. Outside the US, other governments made strides in integrating crypto. The European Union's MiCA regulations came into effect in 2024, providing a comprehensive framework for digital assets in Europe, which gave institutions more confidence to participate in. And in countries in Asia, such as Vietnam, moved to legalize crypto trading, and that is set to take place in 2026, and Hong Kong opened up to crypto exchanges under new guidelines. And we're also witnessing the resurgence of altcoins and new narratives. Where Bitcoin leads, altcoins often follow. And the 2024-2025 period has seen a robust altcoin surge. Ethereum, the second largest crypto, benefited from both the general market uptrends and its own fundamentals. In late 2024, multiple Ethereum spot ETFs were approved in various markets, pairing renewed institutional interest in Ethereum, and the price for it broke out above its previous highs, aided by its transition proof of stake, which was completed in 2022, which now allows investors to earn yield by staking it, and that could be a master stroke as well. Analysts are projecting Ethereum to reach between $10,000 to $15,000 by the end of 2025 if the cycle maintains its current momentum. And beyond Ethereum, many altcoins outperformed as the bull market progressed. Historically, when Bitcoin's advanced stages, investors rotate profits into altcoins, giving us what everyone is talking about or looking forward to, which is proper altcoin season. And let's not forget market maturity, which is as a result of some trials and tribulations. You're talking of the likes of FTX failing that strengthened the markets. So any of the bad actors, yet Celsius, going out of the market because they were highly leveraged. Now we are left with the better players or the good players you might want to add. So my final thought is that as far as understanding the crypto market cycles, Bitcoin and the wider crypto market, bull market cycles, I think they are driven by a confluence of factors. Long-term cycles have been powered by supply-demand economics. For example, Bitcoin's halving, shifting investor sentiment, changes in regulations, and availability of liquidity or capital within markets. Each bull run often has its signature catalyst, from ICOs to DeFi booms, and each bear market has got its own triggers, from policy crackdowns to leverage unwinding after a frenzy. During the 2024-2025 period, part of this cycle, a perfect storm of supportive macroeconomics, regulatory green lights, including ETF approvals and unprecedented institutional adoption, has created a backdrop for a strong rally. Bitcoin not only reached its new all-time high, but did so with greater participation from traditional finance, and this mainstream has in turn buyout altcoin. While volatility remains an inherent trait of crypto, the current cycle drivers suggest a market evolving in structure. Investors are watching how these forces play out throughout 2025 and beyond, whether the old 4-year rhythm holds or if a new, more institutionally short-tempered era of crypto emerges. What's clear is that crypto's boom and bust cycles are becoming intertwined with global economic cycles and major financial players, making the analysis of these cycles more complex and fascinating than ever. So for those who've been aspiring or pretenders when it comes to analyze markets, you better buckle up because this field is about to change. For better or for worse, we are all here to witness that. Until the next one, guys, this is FD for 4yr-cycle.tv signing out for now. Bye.